For more on this, we're joined by Josh Mahony in London. He's Chief Market Analyst at Scope Markets. It's good to see you, Josh. Now, markets are on a winning streak as we head towards the end of the year. Is this the Santa Claus rally that investors have been betting on?
Yeah, so US markets in particular are doing relatively well over the course of the past three sessions. We've seen the S&P 500 gain over 2%. Remember that Santa Claus rally period supposedly starts on Wednesday. It's the last five sessions of the year and the first two of the next. In terms of historical records, it has been relatively hit and miss, and certainly there is a perception that the lower volumes means that you can get additional volatility. You have some people trying to chase winners into year end to try and improve their books, and certainly sentiment within markets is relatively decent. Certainly it feels like some of the key hurdles are relatively behind us for the time being. The fears around the AI space in particular are sort of being set aside for now. Certainly, they're likely to return in 2026. But yeah, we seem to be in a decent mood towards year end.
And that delayed second quarter US GDP data is due out later in the day. What are markets pricing in so far?
Yeah, it's an interesting one because there's an expectation that we see a downward move from 3.8 to 3.3. But by and large, if you look at that in comparison to, say, where Europe is and you consider the hurdles that are being overcome in terms of tariffs and the like, you've got to say it's relatively decent. It also highlights the fact that the direction of the economy remains upwards despite the jitters we're seeing within the jobs market. So there's two different sides to the coin. Perhaps the weakness we see in the jobs market isn't indicative of a weak economy per se, but perhaps businesses moving some of their jobs to AI and taking advantage of that. So sometimes businesses can do well despite the deterioration in the jobs market we've been seeing.
And gold and silver have been on a record run this year. What's been the biggest driver recently, and how much further can we expect to see them both rise?
Yeah, it's difficult to ascertain exactly what the main driver is. Certainly, part of it has been associated with the idea of easing from the Federal Reserve. Now we're expected to go into a sort of pause period, but of course in May we get a new chair, so maybe the optimists will think we're going to get a raft of rate cuts at the back end of next year. Also, bear in mind we have ongoing concerns around debt and fiscal sustainability, and the ongoing rise in terms of Japanese yields in particular do highlight the concerns around that area.
Josh Mahony, Chief Market Analyst at Scope Markets, thank you very much for joining us.